Donald Trump signs a proclamation imposing 25% tariffs on steel imports and 10% on aluminium, yet S&P 500 is up 2% in the last 5 days. The resilience of global financial markets was again tested this week as US President Trump slapped 25% tariffs on steel imports and 10% tariffs on aluminium imports. The prospects of retaliation from major trading partners are high, with rumors that Europe may impose tariffs on the likes of Harley-Davidson motorcycles, bourbon and blue jeans, adding to market volatility at the beginning of the week. However, by offering exemptions to the US's real friends, including Canada and Mexico, Donald Trump has helped calm sentiment in equity markets, and we've seen good gains in the last couple of trading sessions. But it's not clear that this is a simple trade tiff. Europe will likely react in the days ahead, and other key trading partners the same. Now, Trump has invoked these powers on the basis of national security grounds, something that is used only in exceptional circumstances. There will likely be tests, challenges, and harsh words in the days ahead as Europe, Japan, and South Korea react. If China was an intended target for these tariffs, it's not obvious that they will hit the mark. China's exports of steel have slumped as a result of domestic production cuts, and hardly any Chinese steel is now exported to the US. Also testing market sentiment this week was the resignation of White House economic advisor Gary Cohn. It's very obvious that the White House and Republican administration have been split on the topic of tariffs. On the one hand, President Trump, Commerce Secretary Wilbur Ross, and Trade Advisor Peter Navarro have led the charge for tariffs. On the other, Chief Economic Advisor Gary Cohn and White House Speaker Paul Ryan have not held back on their concerns that tariffs would negatively impact business activity through higher prices. With Gary Cohn's resignation this week, it's very clear that the pro-business lobby has lost out. In an ominous sign of what may be to come, ECB President last night warned that if you put tariffs against your allies, you wonder who your enemies are. In domestic news, the RBA dropped its guidance on GDP averaging a bit above 3% over the next couple of years at the policy statement on Tuesday, and the timing was perfect, with Q4 GDP announced on Wednesday coming in below economists' expectations at 0.4 on the quarter, and the annualized rate dropping from 2.9 to 2.4%. Despite the softer growth outcome, the prospect of trade wars focused on industrial metals, and iron ore down $8 or 11% from the levels prevailing at the very end of February, the Australian dollar has continued to prove very resilient against a weaker US dollar. That resilience will probably continue next week, with the Australian dollar continuing to hug 78 cents. But the prospects of deepening trade retaliation and likely further weakness in industrial metals should cap. Now, next week also brings NAB business confidence on Tuesday, Westpac consumer sentiment on Wednesday, and speeches from the RBA's Bullock and Kent as well. These are all factors we can talk about in next week's Markets Update.